Remgro has reported a 39% plunge in half-year earnings per share. The investment holding company has attributed this decline to a number of factors. Group CEO Jannie Durand joins us now to put the numbers into perspective. Thank you so much for your time, Jannie. Of course, you did report headline earnings per share slumping over 39%. I do note that you did mention the impact of corporate actions that you had embarked on. But even without those corporate actions, you still would have had a reduction in your headline earnings per share. And I just want to start off by asking you, is this an illustration that the macroeconomic environment cannot be outrun?
No, I think you can probably contribute some of that to that, but we don't want to put the blame on just the macroeconomic environment. I think on the Heineken side, there were certain things on the restructuring side, certain own goals that were scored, so we must take full responsibility for some of those things. On the beer side, the wrong decision taking. So clearly, I think we can't just blame anything else on the macro environment, but clearly it had a role to play. For instance, at CIVH, our fiber company, I mean, the increase in interest rate had a significant impact on the earnings with the amount of debt sitting there, so that had an influence. But yes, so some of the things, of mistakes that was made, we must take ourselves on the chin and not blaming others for that.
And actually, just talking about those, restructuring moves, the own goals that you talk about, would you say that those are fully absorbed, where we won't see an impact of these in the next reporting period?
Yeah, there were significant once-off costs of the restructuring, certain things that happened in the prior period that's not recurring this period, some income like a special dividend from First Rand, etc., once-off transaction costs. That will definitely not be appear again in our results, so that will be out of the system in a year's time. Okay. Clearly, I mean, but then we've got the turnaround situation of Heineken that is still an ongoing process.
Yeah, well, actually, let's go into that. The Heineken beverages performance, of course, one of the things that did stand out, and it seemed that there was a disconnect between the performance in this period, compared to the long-term prospects of the business. What is responsible for that gap?
Yeah, I just want to state up front that we still believe in the investment thesis. We think that the Distell business combined with the Heineken business, much stronger business. We had some headwinds on the beer side, as I said, some once-off mistakes that were made, some once-off issues that actually played through the system. And clearly the market, as you said, the macroeconomic environment is very competitive. I mean, pricing is very competitive, so that put a squeeze on margins. We've lost some market share against on the pricing side. We made some wrong pricing decisions, but that is being rectified as we speak. And we see our volumes coming back in the first quarter. I mean, we've launched returnable bottles that will be able to compete in a bigger segment of the market. So we're positive about the long-term prospects of this combined entity. So we had a weak hiccup, and let's work for the hiccup and look forward. And we're confident that we can turn the business around in the short to medium term.
Yeah. Hiccups and also the macroeconomic environment combined, of course, into all these challenges. You talk about mitigation strategies. How sustainable are those?
They're absolutely sustainable. I mean, the returnable bottle project on the Heineken side, on the Heineken brand, is actually that we've spent most of the capex now. That has been in the system since the 15th of February, and the orders were taken. It's in the market, it's working. So no, it's a very sustainable turnaround strategy there, and we're confident about that.
All right. And I mean, you've got a whole range of businesses in your portfolio, and I'm wondering, in terms of growth momentum going forward, what are you pinning your hopes on there?
Well, if you look at the portfolio, as we say, Heineken is obviously not the greatest story, but some of our own businesses in a very difficult environment perform very well. If you look at companies like Outsurance, RCL Foods with a turnaround in the chicken business, you look at, on the smaller side, a company like Cape Vin, if you look at a company like PG, even Air Products, I mean, they've, in a very, very difficult, constrained environment in the South African context, they've performed well. Obviously, the noise around the Heineken is actually, unfortunately for them, is taking away some of the shine of how well they've performed in a very difficult environment.
And indeed, of course, one of the businesses that do stand out in terms of how it has performed in the challenging environment is RCL Foods. You mentioned it. So now there's this corporate action going on where they are unbundling Rainbow Chicken, and of course that will be listed separately. How will you be navigating that holding?
Yeah, I think we will then be a shareholder in both, so we'll own more than 80% of both the chicken business and consumer business, RCL Foods. We think it's the right decision. These two things don't mix well. I mean, that's been done in the past. So it will be two peer plays and can be evaluated separately on its own. We think we've got very good management teams in place there, under Paul Cruikshanks, under RCL Foods, and under Martina Standers at Rainbow. They're very excited about their prospects on a standalone basis, so they're very positive about it, and I'm looking forward to actually walk the journey with them going forward.
All right. You did mention in your results commentary that the operating environment is starting to show signs of moderation. Can we start seeing this translating to your financials in as soon as the second half of your financial year, or would that be too soon?
I think that's a bit too soon to tell. We've seen some relief on commodity pricing, especially if you look at Siqalo Foods, where there's been some relief on the commodity pricing. We had some relief for a while, at least on the chicken input cost and things like that. So there's been some relief, but you never know if that's sustainable. Things can happen tomorrow, and that can be wiped away if somebody invade another country or something like that. So we never bargain on that, and you need to be prepared for some of these ups and downs in the cyclical environment.
Yeah, and I mean, in terms of taking advantage of some of the signs of relief, and obviously, looking for growth opportunities, what will your capital allocation decisions be based on in the short to medium term?
Yeah, we at CIVH on the Vodacom deal, we're waiting for the tribunal's decision there. I think once we can get clarity on that, and on that we will know what money do we have to spend. There is clearly some growth opportunities there if we actually conclude the deal, that we can continue on the growth path, because we deliberately pulled back on spending on capex in anticipation of the deal. So there's clearly some opportunity there. We still think there's opportunity in the food space, in the branded food space. Some companies are struggling. We're not of scale yet, so maybe there's some opportunities there for growth. There is muted volume growth across the whole industry, but we think if we execute well, we go back to brilliant basics, there is growth for us in the food space. And clearly we're dealing with some turnaround situations. I mean, Heineken must have some growth going forward now that we're fixing the basics. So we're excited about some of the growth prospects of some of our companies.
All right. Well, thank you so much for your time and for your insights on the half year that was, Jannie, and also the outlook for the business in the short to medium term. That was the CEO of Remgro, Jannie Durand.